Hello, good morning, everybody. Hope everybody's having a nice week. Let me know in the chat who all's here, how you guys are doing for this FOMC Wednesday. Pull up some charts here. We'll start going through analysis in just a moment. Talk about what I'm watching out for today. I'll be honest with you guys, a lot of it has already played out here in the pre-market this morning. So it's going to be an interesting day. Definitely a day to stay patient, see what develops. Definitely a day to stay patient and see what develops here today. Good morning, Go Harali. Welcome in. Nice to see you. Thanks for spending your Wednesday morning here. Hope you guys get some value out of this. We'll go through the analysis, setups that I'm watching out for. Doing well, doing well. Yeah, it's going good here. Honestly, kind of a slow week. Have not taken a trade Monday or Tuesday. We'll see if there's an opportunity today. But yesterday was just a no trades kind of day. There was a couple kind of opportunities that I saw for the setups that I had talked about. However, ultimately, it was just kind of slow and kind of grindy. Just didn't have high confidence in it. Didn't feel like risking my money on it. And that's a very important point, right? A lot of people struggle knowing when not to trade. It's one of the biggest things that keeps people unprofitable. News, and then FOMC. Yep. Yeah, so we had PPI news. If you guys aren't aware, inflation came out hot, which just increases fears that the Fed is not gonna cut rates. It's gonna stay more hawkish on rates. The market had already started selling off before that. We'll talk about that here in just a moment. ES continues its relative weakness. NQ is a little bit relatively stronger. The pops have been a little more persistent on NQ. Wow, it just keeps dying off, man. It just keeps dying. Goodness. All right, so we'll talk about it. Let's get into the analysis of what happened here. Just for reference, we have PPI at 8:30 today. That already came out. We have crude oil inventories news coming out at 10:30 a.m. That might spark a little volatility, especially more for those of you that trade crude. But later in the afternoon at 2 p.m., we have the FOMC rate decision, along with, and almost more importantly, is the 2:30 p.m. FOMC press conference, and any questions related to what the Fed is looking to do going forward with rate cuts is going to have a maybe even higher impact on the market after 2:30. So let's get into the analysis today. Pretty simple overall. I'm going to just go through the volume profiles here to show you things that I'm watching out for. So yesterday we had a consolidation day for the most part here. The only setup that I really liked was this failed break over 6,800 and reclaim under 6,800, targeting that point of control down there. That was my favorite setup of the day. However, in the moment when I was watching this setup, for those of you that are in flipping futures, we talked about this live. It was just kind of slow, kind of grindy. It wasn't a vibe. So it didn't feel worth putting on risk for, even though it did end up playing out. Then I cut out from trading after that morning session. Going into the afternoon, I said it's likely to just get choppy going into the big news today. And that's exactly what happened. So there was no need to risk money as we got choppier and choppier into the close. All right, we had a nice big fake out rally on the reopen, swept out prior highs, and then check this out. We had this big old consolidation here. So this was interesting to me, right? So the market was driven up here and then broke these prior highs and then got gridlocked here. So this was a clear development of a supply zone here above 6,800, really specifically here, 68, just above 6,800 to like 68.10 right there. So what we see here is, the market tried to rally overnight. Maybe it was manipulated to do so. And then a lot of buyers overnight tried to buy for this breakout. This is a 30-minute chart here, by the way, guys. 30-minute chart on ES, full daily range volume profiles. Good morning, HVVN, DeBoss. Good morning, Ishan. Welcome in. So what happened here? This is what it looks like when we see what I always talk about, absorption. This was a supply zone forming in real time here, right? So a lot of aggressive buying up here, yet the market did not rally any higher. So what this told us was there was large passive selling in this zone here pretty much all night, absorbing absorbing buyers, right? And then, coming into the open here, we had a nice aggressive break and retest of that, and the wheels just came off. I wish I was at my desk for this, because I would have loved to short that breakdown of that zone. However, it wasn't so ideal, kind of ahead of the news in the pre-market. But if it was a different time, different context, not like right ahead of high impact news in the pre-market, I would have loved that setup. So that brings us to, okay, what's next? Well, the next things that I have my eyes on is this area here where we had this real high volume consolidation here between especially around like 67.50 to 60. Now we kind of already broke through that. So we'll see what happens with this, if it recaptures or not. But this is kind of that next key area that I'm watching here. We already sliced through it though. So what this was an area where we had a lot of consolidation here. And then we had a failed auction under it, and we had really aggressive buyers break out through here and leave this low volume tail, right? So that's starting to fill in here, and sellers have broken through it. But what's going to be interesting here now going forward today is if I see pops into here, fail, and continue lower, the next things I have my eyes on is this area around 67.15 to 6700. And that is just, prior lows, right? Market tends to move towards prior lows if we're going to continue to trend, right? So we'll see what happens down there. If buyers manage to get pretty strong and recapture that and pops hold above that, then we may, at least in the near term, pop and retrace some of these pre-market news sellers. So if I see us reclaim this 67.50 to 60 area and I see pullbacks hold with absorption and aggressive buying and stuff, I may still be interested in a reclaim of that zone there, targeting a pop, back into maybe 67.80 to 90-ish, right? Maybe just a aggressive kind of short squeeze of all these pre-market news sellers if that scenario triggers. Now, it's really going to be a day, guys, and I've been saying this a lot lately. I'm almost tired of freaking saying it. It's really going to be a day, guys, to stay really patient and be okay taking no trades if there's no A+ locations and confirmations, right? We've already had a large move. We already had the prior day fake out reversal, which I love. That's one of my A+ setups right there. Already happened in the pre-market going into the news. We already had the retest of this low volume node, on the sell-off from the news. So it's like a lot of things, unfortunately, sorry, excuse me. A lot of things, unfortunately, have kind of already played out here. And so we have more high impact news coming out today. So if we see a base hit opportunity here early, I'm totally down. However, we need to definitely be very patient and see what develops, right? There's going to be probably new structure and things that develop. And if I see some new structure that's very key with both order flow and technical analysis on price action intraday, I may use that to develop a new trade setup intraday today and play that for just kind of an intraday base hit. But I want to be very cautious against over leveraging and over trading today. I'm not interested at all whatsoever, right? This could be a pretty wild, choppy day, right? We'll see. I'm hoping we start to see a little bit clearer price action going forward tomorrow and next week with FOMC rate decision out of the way, maybe a little bit more clarity on the direction the Fed is going to go, which right now everything seems to be pointing hawkish, which is adding more and more downside pressure to the markets, in addition to the geopolitical stuff with Iran. So there's just a lot of continued heaviness, right? We tend to see continued heaviness, especially at the highs. Every time the market jumps to break prior highs, especially key highs, daily and weekly highs right now, it seems to just run out of gas and get exhausted. And that makes sense here. Let me drop this screenshot in the chat for you guys in Flipping Futures, in case you want this. You know, we have a perfectly clear picture of that here if we just zoom out and take a look simply at the daily chart on ES here. Every time the market has been jumping to the highs, look at that. It just keeps pressing lower. Now, the caveat is that we have this key area down here that's been repeatedly defended too, just around 6,600, slightly above. We gapped up 50 points, so that changed slightly. So like, what is that, like 60 50s now, roughly. So we have that area down there that's been repeatedly respected since October of last year. Okay, so key area of support here, that was my ideal first target. You know, when we were in this consolidation range here in February, I was looking for that to break down, targeting this. Well, that already pretty much happened on this quick gap down, untradeable for me overnight to start last week, right? And then we recaptured. We tried to break back up into this range, failed. And now we keep seeing this, this grind lower here. You know, buyers are trying to defend the lows of this channel, but you can just see how we keep working our way lower and lower into here, right? So the next major key area that I see is if we come down to these lows again, major key area. If we break that, then, you know, look out below. I don't see much until probably here towards 6,400 or 6,500, which is just those key prior lows there, right? So few hundred points downside would be the next targets I see, prior lows. To the upside, don't have too much. This 6,800 area has been repeatedly a level of interest, and what that was kind of the lows of this sideways range that we were in for a pretty extended period of time here, right? You can see those lows held above this area in this sideways range many times. A few wicks over here as we tried to recapture it, and then it eventually broke, and now that's kind of becoming resistance where the market's trying to break back above there and failing. So little bit of a rock and a hard place here. We got high impact news coming out today, so a lot of stuff going on here, guys. Why not detail? Do you know the 6754? How do you know the 6754 area is key and not the actual 30-minute demand level just below it? So to me, guys, these levels are not like I'm looking to just trade price action off this when these levels are hit. I use these as key context to where I'll look at volume profiles, I'll look at the auction in real time on order flow, and that's where my actual trade setups and execution come from, not technical analysis levels that I'm just looking for price action. This is just for context and areas to pay special attention to so I can read the auction in real time. If we come down to a demand zone, I can read the auction in real time there and be like, okay, is this actually reacting the way I would expect an auction to when I'm reading the order flow here? Like a demand zone, are buyers defending this? Are buyers absorbing sellers here? Are aggressive buyers defending this, right? So that's why those are just areas of interest, right? And if it becomes invalid, poof, it's gone. And I look at, all right, what's the next area to pay attention to? Right? Good morning, Zach. Welcome in. Lewis, welcome in. Nice to see you guys in here. All right, so those are the major things that I'm watching out for. I'm not looking at NQ too much right now, guys. Volatility is a little bit higher on ES now, so I'm just sticking with that. I'm, 90% primarily an S&P trader, and I I do look at the NASDAQ for confluence, and I do start trading it more, from time to time, when, especially when volatility is a lot lower on ES, or when it just makes strong sense to do so. Like if there's significant like relative strength or weakness, and it just makes more sense to trade a setup on NQ, to play the leading instrument, then so be it. You can see here, this is that similar, demand area that we had that low volume node at right here. You can see NQ is making a less exaggerated drop. ES has already like fully broken that. ES is like down here now, relatively, right? So NQ is making so far still a less exaggerated drop in terms of price action structure to ES. So important to watch what happens here. But when I'm looking at the downside, we're seeing relative weakness on ES. So if I'm looking at downside setups, I'm mostly looking at ES. If I do find areas that I want to play for a pop, like this is still in play here on NQ, then I may look at that for NQ today. But when volatility is higher, I tend to just stick on ES, and NQ can get super wild. You read is that on Bookmap? It's really hard to read. Yeah, DBoss, that's a known thing. It's been a phenomenon really kind of the last couple years. He asked about, have you recently realized that on Bookmap it's become hard to read because the algorithm mimicking price action on Bookmap? Yeah, there's like some spoofing bracket orders that make the heat map hard to read. I just have kind of gotten used to it. It happens a lot going into contract rollover for some reason. I don't know if it has something to do with what institutions are doing with rebalancing positions or what, but going into contract rollover, which is this Friday, it happens a lot. One hack you can do to get away from that is there is a add-on called TM Lite, Trader Map Lite here on Bookmap. You can turn that on and it will open a new tab here. And if I go to that, it filters out those bracket orders. So you can use that TM Lite add-on here on Bookmap, and it will pull up a new chart, and you see it says ESM6, same thing, but then it says at TM Lite. And so that filters out those kind of annoying spoofing bracket orders. Now, and I may turn that on here because it is becoming so annoying. So I may actually leave this on now. The only thing is sometimes it can filter out legitimate orders that I would actually want to see. So I do weigh that, and you can go into the settings for it here, and you can filter the sensitivity. I have it turned on low to filter out the least amount possible. I just want it to filter pretty much those annoying bracket orders that are not actually filling anything, and they're just kind of spoofing the market. You can see, so look at the regular ES on Bookmap here. You see all this stuff on the heat map that's like distorting the view, making it hard to see, but none of it is actually filling orders. They're pulling. Every time price moves up or down, those bracket orders move, and it just never ends up, nothing ever fills. So if you use that TM Lite, it takes that away, filters that off. But yeah, sometimes it's not perfect, right? It's just a help. Question, how do you know that ES has more volatility compared to NQ? That's not what I said. I didn't say it has more volatility. I'm just saying it can lead they're weighted a little differently. And so you will notice, like doing technical analysis on both, one may be leading a little higher, one may be leading lower. Generally speaking, for trade setups, I like to be in the leading instrument, not the lagging instrument. We've gone over this extensively in my coaching group, Flipping Futures. So if you're not in there, I recommend joining in there to learn more in-depth stuff. But it's leading. I like to be with the leading instrument. The other thing I said is when volatility is lower in general across the market, ES can be smaller and choppier, whereas NQ is typically a more volatile instrument anyway. So it just has larger price swings. So when price action is slow and ES is in a small choppy range, there are still large enough price swings for better risk versus reward on NQ. But right now, ES is kind of leading weakness, whereas, NQ is a little bit more sideways. It's holding up a little bit better. And I'll just show you what I mean here. Look at a chart on both, just so we're clear. Sorry, I had to pull this up to try to get this in view. All right, so this is what I mean. Just look at this is simply a 4-hour chart on both ES and NQ. You can see how ES is more sideways here, whereas, NQ is more just sideways here in this range since February, whereas NQ is clearly directionally, moving lower. So if I'm playing a short scenario, obviously near-term level and location and confirmations are going to be most important. But just looking at the higher time frame here, we can see that, okay, it's going to be easier for me to get lucky with the downside here because we are moving lower overall on ES, whereas NQ is more sideways here, right? So it doesn't have as much exaggerated downside movement. In fact, when both of them occur, when both of them pop, ES is popping, NQ is popping higher, ES is popping lower, right? And then when they drop, ES is dropping lower and NQ is dropping not as low, right? So if I'm playing a top reversal here, I'm going to have a better top reversal on ES because it's making more exaggerated downside moves. There's more downside pressure on ES, right? So that's what I mean as far as playing the leading instrument and relative strength or weakness. All right, guys, thanks for tuning in today. We will be back on live stream today around 2 p.m. for the FOMC rate decision. So I'll be back on here for the live trading on YouTube today for fun. So I'll jump on here with you guys. So make sure you tune back in around 2 p.m. for the FOMC session, afternoon session. We'll jump on and watch it, go through it together, see if any trade opportunities come up. For those of you that are in flipping futures, I'll see you guys over in the Discord for the live trading session, and we'll go through a lot more there. If you aren't in there and you would like to be a part of it, the link is in the description of this video. It's a coaching group that I run where we go through a lot of live trading, analysis, and mentorship for those in there. All right. Thanks for tuning in. I hope you guys got value out of this analysis. Hope it helps you start your day. And if you guys do have questions, make sure to drop a comment on the video. And if you can't get a hold of me, the best way is if you don't get a hold of me in a comment, just send me a DM on Instagram. All right. I'll see you guys tomorrow. I'll see you guys this afternoon on YouTube, and then we'll be back on here tomorrow. All right. Peace.